Welcome back to the Monthly Alts Pulse. I'm Michael Sidgmore, co-founder and partner of Broadhaven Ventures and founder of the Alt Goes Mainstream podcast. In addition to being joined by iCapital Chairman and CEO Lawrence Calcano, today we have Hightower's Managing Director and Head of Private Market Solutions, Robert Picard.
Thank you.
Thank you for both being here.
Good to be here again, Michael.
Good to be here.
Excited to talk about alts. How do you think about building an alternatives platform at Hightower?
And thank you for having me. Hightower right now is a community of 140 separate advisor businesses, and we manage about $150 billion of wealth management assets. And I, of course, work on the private market solutions team, and we provide solutions to those teams. Now, first of all, just let's put this perspective in context. The average billionaire and the average university endowment currently allocate typically more than 50%, 50%, to private markets. On the other hand, the individual investor is less than 5%. So we're really taking advantage of the leveling of the playing field. And we want individual investors to have access to some of those same solutions that the average billionaire has. Imitation is the best form of flattery, and I think it's important to have that. Now, we also have to take into account the fact that there's been a significant sea change. The three of us have benefited from a 30-year bull run. And basically, in 2022, that was a year where both public equity and public fixed income lost 20% and 10% respectively. And what we've now seen, in part thanks to iCapital, we've been able to establish data going back 1 year, 3 year, 5 years, 10 years, and 30 years, which demonstrate that having similar allocations to private markets, whether it be 20% or 30%, you have much better risk-adjusted returns. And that's really where we see this incredible opportunity developing. And to frame it to our advisor businesses, to our advisors, we typically will say, we're not saying get rid of your public equity and public fixed income. That is the core of your portfolio. That's what's liquid, and that's what you're comfortable with, and that's efficient. We look at private markets as simply complementing your public equity. So private equity complements public equity, and your private real estate complement your public fixed income.
So I think that's a great jumping off point to Lawrence. When you hear Robert talk about leveling the playing field, enabling more investors to get access to alts, how do you think about operationalizing that from a technology platform, helping firm like Hightower you've worked with do that?
Well, I think it's really critical when Robert talks about the delta between sub 5% and maybe not 50%, but 30%. Just think about the dollars that are involved in that. It's a very significant shift of dollars. And like with any other complex workflow, you need technology to help make that happen seamlessly. We've always thought that this business at 3%, 5%, 50% starts and stops at the advisor's desktop. And so if you make this easy for the advisor, when I say easy, I mean you educate them the right way, you make sure they have the right types of product for the clients they serve, you make sure that educating the clients is easy, you make sure that the process of actually subscribing makes sense and is intuitive, and then all of the things that happen post-investment are also easy for the advisor to manage. That's how you actually affect the change Robert's talking about to get to a 5% to a 25 or 30%.
It's a really interesting thought embedded in that point, which is you need to be on the advisor's desktop. Now, it's an interesting kind of interplay between iCapital, Hightower, and Robert, the work you do at Hightower, and then you have to work with all the advisors and convince them and work with them collaboratively as to why and how they should use alts.
I think the phrase we use is find solutions for them, provide them with solutions. Yeah.
So on that point, how do you think about that? Because you may have a framework in thinking about private markets, and you'd work with a platform like iCapital to do so. But then you have to operationalize that by working with all the advisors and helping them find those solutions. How do you go about doing that?
We really want to improve the experience, and that's been a challenge. And in part thanks to you all, the experience is slowly improving. And I'm going to date myself to a certain degree, but I liken it to the telex machine. And or for those millennials, maybe the fax machine. And sort of dealing with private markets has been like dealing with a telex machine, which is highly inefficient. And today on the public market side, whether it be equities or fixed income, you can literally buy and sell on your iPhone. I mean, it's really easy. And as you've promised now, Lawrence, multiple
Yes.
times, we're going to get it on our iPhone sometime soon. No, kidding aside, we're aspiring to that
Yes.
layer, and that's really where we have to get to, where that point where private markets become much easier, and the user experience, both for wealth management firms and for their clients. And then, of course, the other part of what you've done been so successful and being a leader is that element of what I refer to as democratization and miniaturization of private markets. And really, we just alluded to the 50% where billionaires are allocating north of 50%. We're probably in the framework of 5, 10, or 20%. But let's say what's really changed, those investments were not available to the individual investor. Where a few years ago, you had to have a minimum of $25 million to invest in certain well-known private equity firms. I had yesterday come across my desk an investment in a private equity solution for $2,500. And that really is what should excite all of us, because we're really leveling that playing field. And it's really, I think, a great development, in part thanks to iCapital, that individual investors have access to those same opportunities that were traditionally only reserved for billionaires and university endowments.
I think one of the important things when he talks about experience, it really matters, and you have to understand and disaggregate the fact that a high net worth investor is not one thing. And so providing a solution that caters to someone who is investing like a foundation or an endowment, and someone who's not, the types of products they can get access to, maybe that they're permitted to have access to, the education they might need to progress to make the next step, and the technologies they need to process it are all going to vary. And so it's not about delivering against one spec. It's about delivering against a continuum of different needs, all of whom are important to the advisors at Hightower and in other places to make sure they're getting the right experience for their clients.
It's a great point, and one that I want to hang on to, which is something that appears to be happening in the development of private markets right now, which is this interplay of access on one hand and just providing access, like you mentioned, Robert. That's table stakes now. Now you're starting to see customization and differentiation in private markets in terms of how platforms and advisors figure out how to customize solutions for clients. Lawrence, I want to start with you on that point. How do you think about that interplay between access and this increasing trend of customization and differentiation for advisors working with clients in private markets?
There's just an adoption cycle. And I think any new product in the world, whether it's a different type of financial investment, whether it's a new type of phone or watch or sneaker or game, any new product has an adoption cycle and a curve, right? What we had in the earliest days are people, they just needed access. This was an institutional asset class. People didn't have access. And there were a number of reasons for that. We've talked about them: sizes, access, education, whatever. And so we broke that down. But as you get to the place where now you're offering this asset class more broadly to your investor base, if you're an advisor, the next wave of advisors and their clients have a different set of needs, right? And they're used to investing in a certain way. They're used to using model portfolios. They might use SMAs. They're used to using a set of tools to help build portfolios, right? And so you've really got to meet people, advisors in particular, and their clients where they are. And so that's informed a lot of how we've developed our technology to be able to cater to advisors that want to be at their desk, they want to have alts included in a model portfolio, and they want to be able to roll those models out to their clients for whom they're appropriate. And that's a continuing journey, and there'll be further things that we develop to deal with where advisors are at that point in time.
That's a great segue into Robert. How do you think about what Lawrence just said and in the context of the question, thinking about that balance between access and customization and differentiation for the advisors and clients you work with?
We support at Hightower 140 separate advisor businesses. We don't typically have, for instance, a model portfolio. One of the benefits, I think, of being part of the Hightower community is the fact that we leave them a certain amount of autonomy, and the reason they join Hightower is they have that flexibility and to be basically the fiduciary. And they know their clients best. I mean, who am I? Or I work with Stephanie Link. Who are we to tell them how they should be allocating? Because each client is different. Each client has different needs, different demographics, different age group. It comes back down to an element of experience improving the experience, educating. We have right now probably several dozen teams that are very active in private markets that allocate anywhere between 5 to, in some cases, north of 50%. And then we have a majority of our teams that currently have not yet embraced private markets, who are still using a 60-40, which is more of a traditional asset allocation. So really, a lot of what we're doing is trying to increase the participation, awareness, education, which is very, very important to us. The other part that we're trying to do is, we talked about it earlier, the experience investing has been, to a certain degree, painful. So we've been working, I'd like to think, at the forefront of the wealth management community, creating a straight-through processing solution, what we refer to as STP. And that's really with the assistance of some of these leading financial technology firms, such as yourselves, which allows us to go from everywhere from subscription all the way to reporting in a straight-through solution that requires us to work through, within our firm, with the investment solutions team, our compliance team, our legal team, our operations team, and of course our providers or partners in some cases, and that's really important.
On that point, what do you think is the biggest unlock to getting more capital from the Hightower community going into private markets?
Just improving the experience. We provide solutions to our wealth management teams. To a certain degree, those are our clients, but their end client also has to have that experience. And that's something that I think you've done a phenomenal job and been a leader at improving that experience.
Thank you for that. It really resonates. That piece resonated. But what you said before that really resonated in terms of the experience as kind of the major impediment. There's only so many hours in a day, and advisors are doing a lot of things, and you've got to make this easy. I think industry-wide, changing that experience. But I'd also mention one other thing, which is the advisors. This is a value chain. We operate in an ecosystem. The advisors obviously are a critical part of that ecosystem and their clients, but there are other players at the table too, like custodians and transfer agents and reporting packages and so forth. And when you listen to the STP, the straight-through processing story that Robert talked about, that means that we and they have to embrace the others who are important in this chain and make sure that our systems are speaking together, and all of those players being on the same page all contribute to the type of experience the advisor has. So this is not just about two firms getting together and figuring out amongst ourselves. We've got to make sure we're including all the other players who are important to this industry.
And it's probably worthwhile to add that there may be some players who shall remain nameless who haven't quite plugged into yet that straight-through processing element, and makes it a challenge for firms to work together.
But if there is one major pain point that's on your mind right now, if this was solved in private markets, how much that would impact the space?
Well, I've got views on this,
Yes.
but I'd say the first one, without mentioning names, I think the custodial experience. A lot of our teams are very dependent on their custodians, and that, to us at least, has been a real challenge, and we continue to target that. Now, I'm very hopeful. But again, our success can't be based on hope. But I think the smart people are talking to the right people, and we'll hopefully get that fixed over the coming years.
Lawrence?
Yeah, and I would say it's also administrators and transfer agents, right? Because you've got investment decisions that get made, and then importantly, you've got all the things that happen after. And how easy is it to get reporting information? How easy is it to make a capital call, et cetera? And I think getting that whole ecosystem together and operating in an efficient manner. This is why we've talked about the use of the distributed ledger as a way to help get everyone on the same page. Right now, there are a series of what I'll describe as just redundant activities that take place at almost every part of the chain, where people are just checking data that is being checked in the next place and the next place and so forth. And so how do we change the paradigm and the data ecosystem? One of the reasons we bought Mirador, and one of the reasons we're launching this big DLT project, is because we want to try to help solve the data piece in addition to the technology or functional piece that we've been talking about, because both pieces contribute to the experience that is that gating item.
It's a great segue into taking this conversation from the operations and processes to the investing side, and what you're both seeing on the investing side, because those things have to happen in order for the investing side to be unlocked. And also they feed back into the investing side as well. The more data people have and the quicker they're able to get that data, the better they'll be able to understand what to invest into and when to invest into it. I know, Robert, you have some views on private markets in this upcoming vintage. You've talked about it before. What are you most excited about from an investment perspective? How are you thinking about current landscape in private markets from an allocator's view?
So I'm very excited. And really it comes down to we're at a transformational moment. First one being, as an example, the Industrial Revolution was 100 years. The service economy was 50 years. Digitization 1.0, the internet, has been 25 years. The only constant in what I just described is not the change itself, but the acceleration of that change. If that's the case, digitization 2.0, which is artificial intelligence, which I'm sure you're embracing to a certain degree, what I think is exciting is digitization 1.0, that's going to be a 10-year phenomenon, which means you have to plant the seeds today. In some cases, for as little as a few $1,000s, you can plant your seeds in the opportunities that are going to basically bear fruit over the coming years. Today, we have 4,000 community banks. We're dealing with a transformational moment where the capital structure, the lenders are changing. And what's happening most likely is certain community banks, there'll be less going forward, probably 4,000, maybe to 2,000 over the coming years. That's going to be picked up by private credit managers. And it's one of the reasons that Howard Marks and others talk about this sea change. We're entering into what I refer to as almost the golden era of credit. And there's huge opportunities because of these transformational moments. Same, I talked about artificial intelligence, robotics, automation relating to manufacturing, data centers relating to all the technology that's needed with AI and all that demand that's being used up by iCapital to generate, to do all the reporting in an accurate, consistent, and efficient way. Now, kidding aside, that's the opportunity. So vintage 2024, 2025, I believe is going to be some of the best vintages we've seen in years, probably since the global financial crisis.
That's a great jumping off point to Lawrence. You obviously see so many different funds, you interact with so many different advisors and platforms. When you think about what Robert said about the investment outlook, how do you think about that, taking in all the knowledge and data that you have from the platform?
Sure. Look, I agree with what Robert said. I would just sort of extrapolate broadly and just make the comment that the private markets are playing a more profound role in the economy, right? He talked about private credit, what's happening in the banking industry, and therefore the role of private credit. Larry Fink has talked a lot in his most recent letter about the importance of the private markets with respect to infrastructure investments, of which that is a global need, right? And so looking at how private markets play a role in the credit markets, in the infrastructure markets, and obviously in the equity markets, the private markets broadly are in a profound place to, I think, influence global economic development as a result of the role they play. There'll always be ebbs and flows. Last year was a very credit-intensive perspective, and that's a function of the fact that people had more of a risk-off mindset. And in a risk-off mindset, if you can get double-digit return, which a lot of the private credit funds were returning, right? You had a nice spread to SOFR, and that was getting you to 10% given what happened with interest rates. So private credit was very attractive. We're seeing an increase in the interest again in private equity and infrastructure as well. So, you'll always, like with other markets, you'll see sort of the cycles of which strategies make most sense for clients. But overall, the impact of the private markets on global economic development, I think, is profound and quite important.
I think we can't underestimate, A, the rate of change that is happening, but B, the impact that private markets is having on that change. I want to shift to the other side of this. Is people talk about the excitement in private markets, as we've discussed, and we certainly can't get away from that because it feels like it is only going in one direction. But I do want to, you both are thoughtful and measured in your approach to how you think about private markets as well. So I'd be remiss not to ask about what worries you most about private markets at this stage, because we've gotten through the access point. People now have access. It's been unlocked. It's exciting, but there's also questions and challenges. So I'd love to hear from both of your perspectives what you feel is worrying you or on your mind when it comes to doing private markets in a measured way.
Well, I come at this, I'm typically a skeptic. So I've been doing due diligence now for over 30 years on some of the best active money managers in the world, that people be aware of the fact that yes, private markets complement your public market investment, and they will provide better and improved risk-adjusted returns, provided you select the right managers.
How do you think about that?
I worry about something probably a little more systemic, and I think Robert hit on this as well, which is just people doing things when they're ready to do it. And when I say that, I mean when they actually understand what they're doing, right? There's always a temptation when lots of people are talking about a certain kind of investment or a certain opportunity, there's a FOMO that exists out there, and people just don't want to be the only one at the club.
What's FOMO? What? Just kidding.
Fear of missing out, my friend.
I know, teasing.
Robert has some FOMO.
I'm very impressed with your knowledge of the lingo today. It's very good.
And I saw this in the internet back in the mid to late 90s, where people were afraid to miss out on internet stocks, and they started piling money in into companies they didn't really understand. And I think that's a cautionary tale. And as we think about how these products roll out, all of us need to collectively work together from an educational standpoint and a suitability standpoint, and make sure that we bring products to advisors who understand the products and clients for whom they're suitable and who also understand the products. And I think if we're measured about that, all of the things we're talking about, the enthusiasm for the private markets, et cetera, will actually have a chance to come into fruition.
It's I think a great way to wrap this episode up. When I think about that, I think of there's the straight-through processing that you talked about. There's the acceleration of change that you also talked about. We're obviously speeding down the alts highway, but at the same time need to do it in a measured approach, and that's why also great to hear that you need to think about things in a thoughtful, measured way, as you both shared. So thanks, Robert and Lawrence, for coming on this episode of the Monthly Alts Pulse. Thanks for watching, everyone. I'm Michael Sidgmore. See you next time on the Monthly Alts Pulse.